HPE absolutely crushed it again. They had their highest revenue since 2016, highest, a record for operating margin, up 80 basis points to 11.88%. They raised revenue and EPS, which was incredible. And their run rate, their ARR, an annualized version of that is $1 billion. And if you look at where the company was before Antonio Neri came on, and I really appreciated the conversation that I had with him last Friday on earnings. The company has just, it is not even the same company, right? It's a company that is less focused on volume and more focused on value. It's a company that's more focused on software. It's not that hardware doesn't matter, it does, but total solutions with a combination of their own software combined with their own differentiated hardware is where it's at. And then finally, right, you have to give the tip of the hat to GreenLake, which has a lot to the driving of that ARR number, is a huge thing. In fact, over the last 2 years, they doubled the as a service number to $10 billion through the end of this quarter. So, Daniel, the company just doesn't get the credit I think it deserves. It's funny, a company like Salesforce has a train wreck, right? And they, make this comeback, and their stock just skyrockets. And HPE, again, you can no longer say this is a fad. You can no longer say, oh, this is because they're catching up on supply chain. This is because they have the right strategy. This is because of the incredible leadership of Antonio Neri, and the company deserves more credit on the street.
Yeah, I think I was just pulling up a data point, but I mean, I think the company trades at just a incredibly low ratio at most times. I mean, on the trailing 12, it's like, it's maybe in the range of around 20. And it's actually trading higher. It's doing better right now. It lingered at $12 or $13. It's up at $15 a share. Company pays a dividend. I came out in November, and I basically put a Market Watch piece out saying, watch out for kind of what are considered to be the stodgy old tech companies, and watch them have a really big 2023. I'm here to collect credit because I think it's important from time to time when people make good calls. Let's talk about the tailwinds for HPE. The tailwinds for HPE is they made the transformation early, meaning that every one of the big OEMs right now is going through this process of saying, we want to go to subscription. Most software license companies are doing the same thing. Guess what? HPE saw that early. 2019, Antonio Neri announced the everything as a service strategy, HPE GreenLake. The company has made that move. Of course, it's been able to grow that business, to a substantial recurring revenue number, and has been able to do so. I believe it's run rates $1 billion now for the first time of recurring revenue. Yeah. And so that's a big, meaningful transformation for a company, but it still trades like a company that just sells big iron. And so that's one of the things I think that hopefully the market begins to fix, but historically has not. And by the way, I mean, Dell has had the same struggle as it's moved into multiple billions of ARR. So this is a industry-wide sort of challenge. I believe in a meeting that was open, right? Because Chuck said everything we talked about in that meeting at MWC was, I mean, the articulate Chuck Robbins from Cisco said the same thing. I think Chuck's company, CEO of Cisco, Chuck Robbins, has over 40% of recurring revenue, and the company still trades at a very diminished ARR. And that, to me, has a lot to do with the fact that analysts in the market doesn't fully get or appreciate, A, how critical these companies' technology are to operating an enterprise, and B, how successfully most of them have actually been in their transformations from all hardware or hardware plus some sort of service to a true subscription and software strategy. But Antonio's Neri, and I got a chance to talk to him on earnings night, Pat, sometime around midnight in Barcelona. And, what I really took away is I think he's finally feeling for the first time like there is a little bit of, we get it, coming from the market. And it's being validated by customers who are now looking at the GreenLake portfolio in the crawl chart of products and services for things like data services, data protection and backup, compute workloads, ML and AI, and everything else, and starting to say, we can, we aren't going to move everything to the public cloud. Now, we got that a long time ago. We continue to get that right. And guess what? The biggest beneficiaries are going to be companies that have on-premise services that look like the public cloud. And HPE is the furthest along. And I'm comfortable saying at this juncture, HPE is the furthest along. So that has been a catalyst. And the fact that companies are being more cautious, they're slowing spend, they're being more scrutinous of moving workloads to the cloud, and that they've all settled on hybrid and multi-cloud architectures bodes well for HPE. This isn't me saying the hyperscale cloud is going to slow anytime soon. I actually believe the demand for compute services, automation, AI will only continue to drive forward more growth across the whole landscape. But this also goes back to my comment on MWC, Pat, on why I'm optimistic. This is why I'm optimistic. The market is good for tech. The stock market, maybe not so much just yet, but people and companies are investing in tech to take advantage of deflationary value and to scale the growth of the business.
Listen, the public cloud had a decade time advantage. And it's going to take a while for the hybrid multi-cloud to build out. And I think what's going to separate companies in this future age are their ability to support the hybrid multi-cloud. And that's whether it's a hyperscaler, that's whether it's an on-prem provider. I fully expect one of these companies to get snatched up, acquired by one of these companies to go in and get that. I think they're trying to figure out right now other elements of growth. But Simple Queue service from AWS came out in 2004. Azure didn't even come out until 2010, right? So it just shows you, how much of an advantage that the public cloud has.